Hey everybody, welcome. It is Thursday, the 4th of May. Mark Coe. Just wanted to go over a little concept I like to look at, the difference between making trades versus making money. Talk about this a lot. Are you in this to trade or are you in this to make money? Well, I know there are some people that like the activity, like the action. But the idea of understanding the levels, the areas that are going to give you an advantage. It's the basis of everything I do. It's the basis of everything I do and the whole goal in making money. So let's take a look at euro dollar here today and think about the analysis coming into the day. And it's pretty much been the analysis for the last week or so. It has been the support around 885, 875, 885. And that's been the bottom edge. And euro has come from a spot lower to trade up to this. So euro has held its gap open prices from a few weeks ago. And here's the 885 I'm referring to. So you had to be patient. Think about what you had to be the last several days. You didn't have to be patient on Monday because it traded 885. Tuesday it traded down to it. Wednesday it didn't trade there until late afternoon. And then Thursday it was there. So Thursday at the Asian Open and early European Open. So the difference that I start looking at is saying, do you want to deal or do you want to deal at spots that give you an advantage? And at the end of the day, especially as a short-termer, right, the one advantage you can actually give yourself is the ability to position your account so that if you're wrong, you have small losses. And that if you're correct, you have larger gains. And that's the advantage, the edge you can give yourself. So if you're looking at it from a standpoint of where do I want to deal, where do I get that edge, right? So I'm referring to my newsletter from last night. Euro, support 885. That's it. That's your first level to act at. So once you go draw your 885 support level, and then this is how you see the market develop, right? This is what it looks like as Asia opens last night. There's your 885. So if I'm asking myself this basic question, saying, well, what is the market doing with 885? Is it treating it as an actual support level? Yes. For the first several hours, the answer is yes, it is. It's not getting through it. Continue to watch it. Continue to use it, right? I can deal off that level. It gives me a very dealable level. Europe comes in. This is a pretty typical move that a lot of us see, and there are quite a few traders that I talk to that are just terrified of this little kind of stop probing run, because that's all it really does. It collects a little weak-handed stops. Somebody that has tight, probably the people that tend to listen to a lot of short type money, short-term type money. I'll put a stop one tick below. Put a stop. You get 10 ticks in the money, and put a stop one tick in the money. It's not really conviction type trading. It's really momentum, and it's really quick to act both ways. But when you're able to look at it like this, or this is over the course of 2 candles, it's an hour, right? So 30-minute candles. This is an hour of trade right here. And so what happens is euro trades down below 880, trades to 875, and then immediately rejects that. So the level is telling you, yeah, I broke that level for a minute and then we're right back above. And so if you understand to really establish below a level, you have to be able to maintain that level, right? Otherwise, it looks like a test and a rejection. So the idea of positioning yourself, even if you're going to trade super tight, the idea is that after you get this rejection of lower prices, you're going to want to come back into that market, 889, 890, 891 for that run. And the reason is, when you look at it in real time and your chart looks like this, and you don't have the vantage point of the hindsight, this is what you're going to see. You're going to say, wow, I had a stop at 870 or 875, 878, something like that. I just lost 7 or 8, 9 ticks. Yeah, I get it. If you're that tight, I mean, we can argue all day how tight that is. But at the end of the day, on the very next candle, the market says, I'm not staying down there, right? It says I'm unwilling to stay there. No different than the market up here that gets above a level and says, I'm not staying. That's why candles on close are so much more important. So if you treat things on the closing basis and say, well, how does this level react, right? How does this level react at a closing basis? Well, I'll show you. Resistance level I was using today was 950, right? So here was my resistance level. How did that work out on a closing basis? Until it closed above it, it wasn't impressive to the top side. But the moment we close above it, you cannot be sell side anymore. Not when you're using that as your support. So the idea is, do you want to deal multiple times or do you want to deal to make money? And the answer I come up with is I prefer to try and trade for money. I'm not one of these people that looks at it from the activity standpoint and gets really turned on by multiple deals. In fact, if you look at my blotters, the days I deal the most, I'm probably dealing the worst. And so I try and not do that. It really goes counter to what a lot of traders tend to think, is that, oh, if I just deal more, I can make more money. It's not true. What you need to do is deal selectively, but at really good spots and with real intention. Trade with intention. So if I walk in trading with the intention of buying dips in euro, which was the whole mentality for the whole week, buying the dips in euro, this is really the first full late part of the week that I've gotten a dip opportunity. I just haven't gotten it the rest of the week. They just weren't there. So if you trade with that conviction of, I want to trade buy side euro, that was your opportunity. No different than in the commodities, the futures markets today. We have been very consistent on who's in charge of the crude oil markets. Sellers have been in charge. So if I'm doing anything other than selling crude, it's scalping in nature, right? Because we know who's in charge of the market. So on a day like today, where crude really takes a tumble, it was forecastable from the standpoint of understanding who's in charge, right? So when you look at breakdowns in crude, you look at the breakdown on Tuesday below this 48.25 level. Any subsequent buying never challenged that breakdown, right? That breakdown level was 48.30s. It never challenged it. That's as high as it could get, was 48.23 the other day. So understanding it's not about pushing the button as many times as you can. It's about dealing with the very deliberate set of actions that you're trying to accomplish. So keep your trades to the areas that give you some type of some type of trading edge, from the standpoint of you can risk less than you stand willing to make. And if you can't make that determination, then simply don't deal, right? So we want to keep our trading at an edge with intent. Trade for money, not for volume, not for the amount of trades you can do. So for 4th of May, it is Mark Coe. Hope you guys had a wonderful day, and we'll talk to you soon. Cheers.